Forex Fortune Hunters, welcome. Tom Wilmot speaking, and let's review the U.S. retail sales report, Friday the 13th, 2015. When we're in the room, we use fundamental announcements in our trading to try to accelerate price in the direction of the trend. We would not anticipate reversals. We would not be in a trade in a case of a reversal. We would simply be using the fundamental announcement to really give us some rocket fuel and some liftoff opportunity. In the case of the euro, for example, we would expect that if there were a strong retail sales report, the euro would decline simply because the U.S. Fed is going to use that as ammo for raising rates in the December meeting time frame, and we know that Mr. Draghi is not in any position to raise rates anytime soon, so we have a stronger currency versus a weaker currency. Okay? In the particular case of this, we would choose a pending order, not a market execution order, but a pending order on MetaTrader, and instead of a buy limit, we'd put in a sell stop. Why would that be? Well, if we got to this level, that meant that the announcement was a positive retail sales announcement, and it was likely going to thrust price much lower, and it would do so in a very short period of time because the fundamental announcement amplifies the direction of the trend. Okay? In the case of the euro, obviously we had a reversal because the announcement had softer outcome than was anticipated, and so momentarily what happened was that price, the euro, gained in value against the U.S. Okay? And in the case of the U.S. JPY, which is the second pair that would be mostly affected by this, we had a prevailing trend to the north, obviously, thinking the dollar would get stronger. We would have taken a trade in this particular area on a breakout through these London session highs, and we would have expected maybe to get up to a Fibonacci level like the 1618. In fact, the softer than expected results drove us back down and took us to a lower position, actually taking out the position of the early morning 7 a.m., 6:37 a.m. Price low. However, we would not be in that trade. Nothing bad would happen to us. We would only be in a position to have taken the trade on a breakout to the north. And in this particular case, we would have had our pending order be a buy stop order as opposed to the euro, which we thought was going down. If we got in up at this area, we'd enter our value in here, we'd put our stop loss and our take profit in, and we'd be good to go when the announcement took place in case the volatility, gave us a real rocket launch to the north. And in particular, we'd probably put our target profit in around 123, 122.95, something of that sort, up here in this range, based upon a reversal possibility or an uptrend A to B and then a pullback to C and then ongoing. We would expect maybe that was going to launch us, is what we were hoping for. Nothing happened. The soft report came in. So all you do is go in and cancel your pending order and wait for the next fundamental announcement, and that's stage one of how we trade it. Stage two is to wait and see what develops. Once you've canceled that original order, here you can see that instead of on this particular Fibonacci, which is prior to the announcement, after the announcement, you can see that what's happened is we would expect to have a pullback to the chandelier and then a reversal and a drop-off. That would be the natural Fibonacci wave. A to B, pullback to C, and then a continuation to the downside. Notice what's happened. We've not only gotten into the mid-range, we've had a reversal candle here, we've gotten back up to the high of the move, and now we've gone into some chop. So you can also decide whether you want to trade a reversal of the trend, which would be a continuation of what had gone before, just taking this out of consideration as kind of a one-shot wonder. Okay, that trade we weren't involved in. Now we take a look at the reversal, and at least we know we're going to come back up to this level. Whether we get onto it later in the morning and move to 1618 on this particular chart, which is once again the USD JPY, that's possible, but clearly we have some work to do. We have to get through the chandelier and continue to head higher. And what that retail sales report has done is muddied the water. So right now, it's kind of a neutral to negative announcement, but it wasn't enough to keep us pushed down here, at least for the time being. Now let's take a look at what happened with the Euro USD. And in fact, the same thing happened here. If we were going to, I've added some blue lines here, some trend lines. If we were going to expect that this reversal in the retail sales report to really change the direction of the prevailing trend, we'd have a pullback into the bands and then a rocket ship higher, right? In fact, what happened was we moved down, we took out the chandelier, we followed up with a medallion to the downside, and we've put in a sell zone on the 1 minute chart right here, pull back into the bands and down we go, continuation of the trend to the south. Okay, so this is now looking like it was simply a one-shot wonder, and in fact we're going to continue with the prevailing trend to lower on the Euro USD. One other pair that had the same kind of action, price action, was the Canadian dollar. Here we were on a 1 minute chart. We're clearly in a buy zone. Okay, we'd had a little bit of a pullback. We're in a buy zone. We've continued higher. These are old Fibonacci's, not to worry about it. But in any event, we know that if we're going to have a positive U.S. Retail sales report, we're going to accelerate to the north, right? We might even be able to get back up here to the high of the move, this 100% level, up here around 133.41. And in fact, we're moving to that area right now, but that's not the announcement itself. What's happened is the retail sales announcement comes out. We would be in a pending trade, a pending order, which was a buy stop, right? If we hit a level that we liked and we'd have to go back in time, we'd put in our, we'll find that level in a second, we'd put in our stop loss, we'd put in our take profit perhaps at one of these higher levels, and we'd expect that the fundamental announcement was simply going to accelerate the time frame, sort of like Back to the Future. Off we go. We're not going to be doing a lot of pullbacks. We're just going to launch ourselves with high volatility into that next price category. Now let's see what we can do here on this one with a potential high level. Here we were with our 5 minute buy zone. We would expect we'd be able to get through this 50%, these two recent highs, the high of the London session. We just expect we'd be able to get through that on that announcement. And in fact, now we have, you can see. But what's happened is that momentarily the soft announcement has now overcome the prevailing trend to the north that was in place. And we can add to this particular issue the fact that on TradeStation, we can find that today oil has actually dropped to its lowest level in quite some time, taking out the weekly low and getting down into that 41 range, $41 a barrel on the CL. And obviously because the Canadian dollar energy complex is a huge part of their economy, that's going to mean that with the dollar increasingly having a liftoff potential in December, and the Canadian dollar continuing to suffer from lower energy prices and lower commodity prices, that we would have a divergence of the US dollar and the Canadian dollar and a takeout and a move back to some of the recent highs. Let's even go out to a 1 hour chart. Let's see where we stand. Notice yesterday we were in this position in the mid-range of this particular move, and now we've come back to recover the 100% area of that move yesterday when we had a crazy kind of oil situation as well. So that's just a brief review of our fundamental announcements. First of all, we would like to trade the announcement in the direction of the trend. We'd like to use the announcement to accelerate price in the direction we're hoping it will go. We're only in the direction of the trend with our pending order. We're not going to take any reversals. And so if the announcement doesn't do what we expect, we simply will be on the sidelines. Then we can wait for further information and a further development based upon whether there is say sell covering, a short covering rally, or whether there is a big heavy emphasis on trailing stops getting hit on the move to the upside. Okay, so that's how we would handle it. Hope that helps, and look forward to seeing you back in the room.